Hello, you legendary friends. My name is Edward, and I'm very honored to be here for the book launch of legendary Rusty Vaibhav. Can we just unmute for the moment and give Rusty a round of applause? Please unmute. Let's give Rusty a round of applause. Oh my God, Rusty. It's just so good being here. So I just want to say a big thank you, big welcome. Just let you know a few things. This is being recorded, so please keep it all clean and positive. And this is a book launch for Legendary Rusty as well as a networking event. So please use the chat on Zoom to share your LinkedIn links, connect with each other, promote yourselves, as well as contribute to the discussion. And be on the lookout as well for links to buy Rusty's book. So I just want to say a big thank you. Just a few rules. If you can please keep your microphones on mute, that'll be good. So just keep your microphones on mute all the time, just keep audio down. And of course, when you go to speak, unmute and then go for it. So let you know the format. What we're going to do is we're going to speak to some of Rusty's legendary friends who know a lot about Rusty. Then, of course, we're going to speak to the man of the moment, and then we're going to go to hot mic where you can contribute. So if you just keep yourselves all muted for now, that'll be wonderful. And don't worry, you'll all have a chance to speak. So I was just going to say big welcome, Network and Connect. Now, to kick off the event, before we go to legendary Rusty, who's wonderful, we're going to talk to an interesting surprise yesterday. Rusty and I were talking. He goes, Ed, I've got a few guests I want to bring onto the webinar just to introduce me in the book. And he talked about Mike Mortlock, big fan of, the very handsome Kyle Manson. And then he talked about one of my old friends from years back. We've been on the board of Parramatta Chamber together, and we've done some crazy stuff. The legendary Jim Vass from A2B Partners. Now, if you don't know Jim, he's a real rock star in Sydney. He's a top accountant. And let's start with you, Jim. Can we give Jim Vass a round of applause? Jim Vass, how you doing, my old friend?
Not bad at all, Ed. Not bad at all. It's good to be here.
And I got to say, I love the beard. You used to have a full set of hair and clean shaven in the old days, Jim.
Oh, it's just slid a bit, that's all. just like the shoulders and the chest have as well. It's fine.
Now, Jim, tell us a little bit about you first. You're a powerful high-end accountant and more, aren't you?
Look, I'd like to think of myself as a very humble sort of accountant, but we started our business back in '94, so we've seen quite a lot and been through quite a lot with our clients, and have pretty much been working with investors, helping clients actually try to get ahead. And this is where when I read Rusty's book, it just resonated with me because it's simply a matter of being around that long and seeing a lot of transactions. It's good to actually see something that's not full of guff, that's actually based on sound knowledge and how things actually work and traps and pitfalls that you need to be aware of. So I've worked with Rusty a few times as well to help out some of his clients. And probably 6-7 years ago as well, we decided to join the financial planning fraternity as well. So we're in a position that we can actually gauge and try to balance things out as well, because from my perspective as well, and the book talks about it, it's all about having a strategy and actually sticking to the strategy and mitigating risks along the way.
Yeah, and I love it. Well said. I mean, what I've always loved about you, Jim, if you've got the ultimate BS radar, and I've always said if you can get something past Jim Vass, it means it's 100% true and factual. I wanted to ask you, Jim, was there something in the book that, as you were reading it, what really grabbed you personally? What was something that you learned from the book that you were really impressed by Rusty's thoughts?
Look, I suppose I haven't really thought about it so much at this point in time in my life of accumulating multiple properties, because from my perspective and where I'm at, I've already done that, okay? But what it did, I suppose, point out that, and as a financial planner, when you're wearing a financial planner's hat, there seems to be a tendency to sort of say, look, you've actually got to try to mitigate what your risk. So therefore, accumulating too many properties too quickly can be a problem. When I actually thought about it, it's actually not a bad strategy at all. It just depends on when you start this strategy. So if you start this strategy early enough in the piece where you can actually start looking at addressing your debt levels as you get to my age, then it's a perfectly sound strategy, as long as that's not your only strategy. But it's certainly a perfectly sound strategy to have if you've adopted it early enough, and as long as you don't make it your sole strategy. And this is where Rasti actually talks about as well. He says, look, you've got to speak to a financial planner, you've got to speak to an accountant as well in order to make sure that you got things right.
And that's what I loved about that was I mean, besides knowing and loving Rusty personally, that's what I loved about the book. The book wasn't some recipe. It really actually taught you how to think on a deeper level and talk to all the right people. I love that part of it, Jim.
Yeah, and it's not selling you anything. It's educational. What Rusty's trying to do, he's imparting his knowledge and making it fairly clear that if you want to succeed, you've got to have people on your side. You've got to have the right team on your side. And this is what I suppose Rusty's surrounding himself with as well, having the right team to work with his clients. And I suppose we all look for that, because with any profession, you want to make sure it's any success is never sort of driven by one person. It's actually having the correct people there to advise you at the right time and to keep you on track. You look at any professional athlete, they're not a professional athlete on their own. They've actually got coaches that'll actually help them get to where they need to get to. And each of those coaches has their own specialty, and they can help the athlete in a particular area. And this is no different when you're looking at it as an investor, if you're looking at it as financial planning, if you're looking at it in any way, it works exactly the same way. Whether it's accounting and you're trying to build your business, you need to have somebody on your side that's going to help you to do that. Whether it's financial planning, whether it's property investing, it's the same thing.
Oh, Jim, so brilliant. I got to say, you are definitely like a fine wine. You only improve with age.
Mate, it's because of camera. I've got it looking on young mode.
Oh, there we go. Could we please give Jim Bass a round of applause? Jim Bass, round of applause. And please, Jim, share your LinkedIn link. Again, I've known Jim for years. We met in a previous life, and big thank you, Jim, for everything you've done for me and Rusty.
Thank you.
Now I want to bounce over to Kyle Manson. Kyle and I actually met, we were talking before, so we met at Blacktown Chamber some years ago, and Kyle Manson's the director of CFC Finance. And Kyle, you even do such a good job with your clients. They give you free whiskey and even gave you your own bobblehead. Do you have that bobblehead handy?
It is the bobblehead in the background there. But I thought you'd like that, Edward.
I think you did well.
Clearly, they did buy it with the COVID fat already put on it. Yes, but great privilege to be here today to support Rusty and watch the journey that he's gone through over the last couple of years. And the content he's been able to put out in this book is incredible. And the educational value, it is vital for property investors to just get some really good education with sound knowledge, and it's a great resource.
Now, I want to go back a little bit, Carl. How do you know Rusty, and in what capacity have you worked with him in, and what can you tell us about Rusty?
So Rusty and I met a couple of years ago, and we started looking at some finance, and then we started working together with some clients, and we've grown and we've worked. He's helped my clients, and I've helped some of his clients with finance. And it's been, I think it's coming up for 2-3 years now that we've known each other. And in particular, especially over the last couple of years, it's been exciting watching Get Rare Properties and watching these clients come through and supporting the clients. And we both really value education, because you can't give too much free education. It's not about working with a client and Rusty's got a secret that he has to keep tight because he can't share that secret. No, share the education, educate your clients, educate those around you, give that education for free and support them, because as they do well, we all do well. And it's been a great journey watching some first-time investors come in. I mean, we've helped multiple clients at the moment, and we're seeing them where they purchased their first property. We had a client we're just settling at the moment, helped a client purchase a property earlier this year, and it's already done a 20% growth. And now that client is able to use some of that money and buy the second property. The thing I love the most is the forward thinking and the strategic planning of helping clients realize where do they want to be. And that's been exciting, that journey with Rusty in helping clients achieve or work towards those long-term goals.
Yeah. And I love what you said. And when I first met Rusty, that was the immediate vibe and experience I had with him. Rusty, exactly. He's not the sort of guy that I've got the secret and hence give me money to learn it. He's much like yourself, Jim and Mike. Rusty is very much, hey, here's everything. Here's the upside. Here's the downside. Yep. Here's the risks. Here's the opportunity. I want to tell you the truth and let you make your own decision. I love how you and Rusty operate in that capacity.
No, thanks so much. I brought up a quote, which I think the whole effort of the book and really sums it up. So John Kennedy says, there are risks and costs to action. but they are far less than the long-range risks of comfortable inaction.
Oof.
And what I love about this book is it gives you that ability to make a conscious decision to take your financial welfare, your financial well-being into the future, to take ownership for where you want your family to end up in 5 to 10 years' time, and make conscious steps to achieve that. And it might be a very small step of buying one property, or a very small step in going and talking to Jim with financial planning, but making a conscious decision to do something good for your family and for your long-term wealth. And this book is all about that.
Now, just on that note, Kyle, out of the book, what was the section or what learning did you get from the book that you liked the most? What was your personal favorite?
I really liked the fact that this is a tool that clients can go back and look at. And it's inspired me to do a lot of videos, and I'm going to be trying to walk in Rusty's footsteps in this regard, because this book, you're not going to be a professional expert investor after reading this book. But we've got a client, you know what, Rusty told us about this property, and he said all these good things about the property. What did he say about it? Because there's only so much time we can spend together. But having a resource that I can talk to my clients and say, look, you know what, this is what we were talking about. You know, if you go look at page number 22, it explains the scenario. You can go through, and it helps people have confidence in the decisions that they're making. And we might need to read it 3 times or 4 times, or go back and check it again in 6 months' time. But in the property world, there is a huge amount of misinformation.
Yeah, absolutely.
Clients get information around the barbecue. You have to buy negative geared property. If your property is not negative geared, you're losing money. Like, it's terrible. It has to be negative geared, or you have to buy off the plan, because if you're not buying off the plan, you're losing money. And there's so many opinions.
Just on that, Kyle, if I can interrupt, one of my friends actually said this the other day on a Zoom. They call it the barbecue business expert. You know, the person at the barbecue is a business expert that knows everything. I love that term, barbecue business expert.
100%. Having a resource to help you navigate those barbecue experts is vital, because everyone's got an opinion.
Kyle, legendary. Can we give Kyle a round of applause? Kyle, big thank you, my friend, and love your work. Keep it up, man. There you go. And there you go. If you just come in, a big welcome. If you just come in, please use the chat. Feel free to network, say hello, reach out to Rasti. Rapali, no doubt, will be sharing the wonderful links to buy the book. In fact, can we wave to wonderful Rapali, Rasti's legendary Rapali? Great having you with us. So Rapali will keep sharing the links. So what I want you to do, my friends, is if you haven't already, buy the book right now. You can get the book right now, 50% off. And Rasti will even get it personally signed for you. So buy the book right now. You're going to love it. And we're going to bounce over to legendary Mike Mortlock. Now, Mike and I only met the other day, and we've been talking a little bit. And Mike is a podcaster, a very sharp interviewer, and also a director in the surveying space and more. And Mike, it's so good to meet you. How have you been?
Oh, very good, Ed, and it's nice to share the stage, as it were, with yourself and Jim and Kyle, and of course Rasti. Very, very humble. So I've been great. Thank you.
No, just to say big welcome. Look, you know, we've only just met, so we're all catching up. But I know that you know Rasti really, really well. Tell us of how you met Rasti and your experiences with him.
Yeah, look, I think our original sort of conversation struck up when he was starting his business as a buyer's agent. And I started a podcast really for our property investor clients. So what I do is tax depreciation is my specialty. So when an investor buys a property, we help them with their deductions and their cash flow. And of course, part of the team, such as, you know, Kyle with the finance and Jim with the accounting side of things. So yeah, we had a good chat. And I've sort of realized straight away that on paper, Rasti sort of seems like we're going to have a conversation about yield curves and inflation hedges, and my brain's going to melt, right? Because he's got that sort of academic background. But in the book, which I have like lots of little Post-it notes of all the gold in there, it's actually plain to see straight away that he's also very, very gifted, apart from the technical side of things, of explaining things really, really simply. So we had quite a few conversations. We've worked together with mutual clients. Of course, interviewed him on my podcast, which I know a lot of the listeners got a huge amount out of. And yeah, we haven't actually met in person because of the COVID situation.
Yeah.
But as soon as we tick that box, I'll gladly call him a friend.
Oh, there you go. Now, I was going to ask you as well, Mike, in the book, what was the one thing that you personally enjoyed in the book that you really learned and got inspired from?
I think it's the grounding. I mean, it starts with his real purpose, right? And I mean, that's quite refreshing to say, what am I sort of here to do? What am I on the earth for? And he's really driven to be able to give his area of expertise to people. And I think that's what the book is about. But also the way that he kind of frames it in the Simon Sinek style, starting with why and looking at the average results of property investors. And, the fact remains that 72% of property investors only ever own one property. And I think that's a perfect way to start. And that's kind of been, I guess, a mission that speaks to me as well, because I think if you're getting into property investing, chances are you're doing it because you want to fundamentally change your life in the future. And there's a fairly strong argument that one property is not necessarily enough to do that. It might be 3 properties, 6 properties, 10, it depends on the value and all sorts of things. But I think that most people that jump in do have goals to own more than one property. And the reason why they don't get it is because they get some things wrong. So that framing was important to me. And Rasti also explains in the book some of the reasons why people don't get it right and why maybe they don't start as well. So I think those are the big takeaways for me. And I think probably some of the greatest value to readers.
And I couldn't agree with you more. And I loved Kyle Manson's and Jim Vass's sentiment, and especially the way where Jim Vass opened with this one. What I love about it, Mike, is that Rasti is not, he's not saying do this. Here's a secret formula, not at all. What I love about it is how Rasti is telling you to go into this with both eyes open. Here's the risks. Here's the problems. This is the landmines you got to avoid. But then here's a benefit. And I love that balanced thinking that you're talking about, Mike.
Yeah, and I think the buyer's agent space and certainly the property agent space needs a lot more of that. Certainly Jim and Kyle sort of made reference to that. It can be a pretty shady world out there, right?
Oh, yeah.
So look, I think especially with the buyer's agents, you don't necessarily need a tremendous amount of qualifications to start a business recommending people to invest in certain types of properties or locations. Rasti just happens to have street cred coming out his ears with his past life as a finance guru. But I think, the property space needs more people like him that understand and are quite happy to talk about the risks, and they're not necessarily flogging a product that they happen to sell or have a vested interest in. So I think the more that we can get, open experts that are really genuine experts in their field that have an unbiased and agenda-free approach to sharing their advice, the better.
Oh, well said, Mike. We absolutely appreciate it. Can we give Mike a round of applause? And legendary. And oh my God, we've got a book. The legendary Madhu, who was on the phone to Madhu this morning, just bought the book. Can we give Madhu a round of applause? Madhu, thank you for buying the book. It's a pleasure. And I was going to say, please buy the book now. And when you buy the book, tell me you've bought the book so I can give you a shout out. And the legendary Linda Lee just bought the book as well. Round of applause to you, Linda, and a big thank you. And Rapali's showing the link. You're getting it 50% off. So now's the time to buy it. And Rasti will get it signed for you. So personal signature from Rasti. I got my copy in early because I know Rasti. So thank you, everyone. Keep going. Keep it happening. And gotta say, love your work. So what we might do now is we might bounce over to, oh my God, Mike's got the signature. Show us that. Go back to Mike. Show us the signature. Oh, that's good. There you go. So if you buy the book, that's what you're going to get. You're going to get it hand signed by legendary Rasti himself. So without further ado, I've strung you guys on long enough. It's time to hear from the man of the moment. Now, I was very lucky to meet Rasti, surprise, surprise, over LinkedIn. I meet everyone over LinkedIn these days. And Rasti and I actually met through one of our very, very good friends, Tremaine Murphy. He's one of our great friends from Melbourne. And interestingly, I got to know Rasti through our face-to-face meetups before Sydney, exploded in a ball of fires and we all got arrested by the federal government for leaving our homes due to lockdown. So, Rasti, it's so good having you with us. Can we all put our hands together and give a round of applause for the man of the moment, Rasti? Rasti, it's an absolute pleasure. And Rusty, how are you feeling today?
I am not sure. I can't really put my feelings in words right now. Seriously, I'm
Are you
overwhelmed with the
crying?
support.
Are you crying? Because you're making me tear up. Oh, he's crying. Give me Rusty a round of applause. There we go. You're making me all tear up, Rusty. There you go. Oh, Rusty. Oh, I like Rusty. That's why I like you. Rusty's got heart. I'm glad this is being recorded too. So, can we give it up? Can we all unmute and give it up for Rusty? Unmute. Let's give it up for Rusty. Yeah, Rusty.
Yay. And he never shows it to anyone, but he's very emotional. That's what he hasn't put in the book. So now you know it.
Oh, there we go. And it's
passionate.
been recorded. Sorry. So, Rusty, man, thank you again. Congratulations on your success. I mean, you nailed it. It's a fantastic book you wrote, Rusty.
Thank you so much. I think book is just a starting point. I guess it really depends on how far it can go and how many people can take benefit of education out there and avoid mistakes. And I mean, the way I look at it, like we talked about risk, and yes, there's risk. There are lots of risk in investing in properties. But the way I look at it is, probably Jim would also agree to it, like there's a far bigger risk of not investing as well. So having a right balance between the two, like risk that you can take, risk that you can manage, risk that you can embrace, versus risk that you can just forget about it because that's so far into the future, you don't have to worry about it. It's kind of a thing like, out of sight, out of mind. And that's what I really want to bring in the book. So book is just a start of the journey, I guess. And it's not about my success, or it's not about my journey. It's just more about what a property or what a mindful investing can do to a family. So that's what the purpose of the book is, and that's what I'm trying to achieve as well.
And just on that,
Sorry.
No, you're doing great, Rusty. I want to go back a little bit, actually, Rusty. What was the moment you decided to write this book? What triggered you to do that, and what was going through your mind, and when was that moment you decided to write this book and put your thoughts into words?
I think there was not a particular moment as such, but I realized that because I used to have a lot of one-on-one sessions with people, I used to get into deep dive discussions, and I realized that I'm actually improving my knowledge as well. Like, how should I convey this? As well as then I thought that if it doesn't really have to be one-on-one, if I just put it down, all the notes and like talking about it, what I'm talking about, give a lot of examples, case studies, that would actually make a point that I'm trying to make a bit more stronger. And because I had so many notes over a few years, effectively, then I thought maybe it's time for me to put it down together in more of a package format that, like I have been writing lots of blogs, but then the challenge with the blogs is that they have, there's a particular length that you can potentially go with, and you don't really go beyond it. And then they become out of context as well, like part one versus part two. But here, this is more of a building up kind of as Mike was summarizing it as well, like starting with your why, understanding why we should be investing in properties, then why, and then talking about the risk and the strategy side of things. And I thought, like, because this is the structure that I follow with each and every individual who has given me the trust to work together. And I thought, like, my purpose is beyond just serving the people that I'm working very closely, but if I can leave some sort of legacy behind, or for the people who can reach out to the book instead of me, that's good enough for me as well. So having that kind of discussion all the time, and being into a new business, it was very challenging as well. It was like I had to put a deadline to it, and that's when I got things moving. So had this idea of writing a book from a social network group, like which Madhu is part of. Somebody shared the book that they've written. I was like, wow, this is something I should also write about it because I'm passionate about it. I really have some message to pass on. Why don't I put a message, put a book together? Started with that. My uncle wrote a book as well. We went to India, the whole family. And then we realized that, book is a good mode or good medium to pass on the message as a package, and you never know where the message can go far. So
it's funny. So, and that's the thing. It's exactly what Jim Vass said when we really started this, is that again, and as you know, I know a lot of people as well, and I know a lot of people in the property investor space. And yes, unfortunately there's a lot of snake oil and shadiness there. And what I loved about what you did, and exactly as Jim said and Kyle and Mike referred to, was that you're not like, hey, here's a secret, here's the pot of gold I discovered. No, you actually, in fact, I don't even think it reads like a property book. What I love about your book is it doesn't read like a property investor's written it. It reads more like a researcher's written, in that you're actually telling us the truth. Here's the risk. Here's the problem. Here are the issues. Here are the things you got to avoid. But if you do that well, then here's the upside. And I got to say, I love the honesty, integrity, and transparency you brought out with this book, Rasti.
No, thank you so much for making that comment, because I really think, as we were alluding earlier as well, like there's so much of misinformation out there. So you asked me about the purpose of the book. If you allow me, maybe I'll share the purpose why I'm doing what I'm doing in the business.
Please.
And look, I was very much comfortable in what I was doing before. So a bit of background for those who don't know, I'm actually very passionate about properties since my childhood. I aspired to become an architect, which I became. So I went to architecture engineering college. So I got a 5 years degree program in architecture. Change of circumstances, had to switch gears, got into IT industry. That got me to Australia via, like, I'm from India, as you can guess. So from India to Singapore and then to Australia. Wow. But what actually really got me there was that I saw my parents working very hard, and they were, trying to get the thing going for the family. And I realized that they're working so hard. But when I grew up, then I realized that when I was earning, then I can potentially put some portion of my savings into investing, and then the money can work harder for me as well. So yes, I can work hard for the money, but if I do the right strategy or take the right steps, then the hard-earned money can work harder for me. So throughout my career, I have been saving and investing, and thanks to Rupali as well, with that she came with the same mindset as well, that it's not just about today, we have to secure for the future. And that's where we had some sort of kitty that we can start investing. And that's where we did what we did. Then I realized that, look, this is where I really want to bring some value back to the community or the people that I know, that how can I encourage them to basically invest. And having masters in computer science, having a very good job here in Australia, I had a calling that, no, I should actually change my career. So I quit my job, went for my full-time MBA, went even to US for to complete my MBA in finance, came back, did my CFA, got into the job. So within few years, of course, there were hard years to switch career in a country like Australia. I had to do all the academic work and went into the research for equities, like what stocks to invest in. And I was actually working with Westpac in a research role, helping the financial advisors and financial planners that where they should be investing the clients' money. And that's where I actually honed my skills of investing. That's not just about returns that we talk about in properties. We always talk about just the cash flow versus capital growth, and the argument actually ends over there, or the discussion, I should say. Not really thinking at all about the risk, and which is inherent for every or any investment that we can think of. So, but this was going on very well. So as a career, I actually grew up in my career from equities analyst to senior equities analyst, then director, then became a portfolio manager. So I was managing funds in tune of $2 billion for my clients, and was involved in a big amount of funds, like a $7 billion fund for Australian equities. So that was going great. But in the sidelines, because of my passion for investing and make the money work, what I was doing is, like, I was using my passion for properties and investing together in property investing. And in 2011, actually 2010, we realized that, okay, like we are at the point whereby we should be thinking of buying a home, or should we go for investment property? So that's what actually got interested in thinking about investing in Australia. And I couldn't really just get an answer from anyone. Like the people whom I talked to, different people, different opinion. And I was like confused, frustrated, didn't know what to do. Then I had to look around, like how successful people are doing. So read so many books, went for multiple seminars, workshops, paid, unpaid, even travel around just to catch up with people. Because everyone who's doing their own strategy, they just are so much focused on the strategy that they have forgotten about the individual that they are working with.
Sorry to interrupt. I just got to jump in for a second. The legendary Juanita Smith just bought your book. Can we give a round of applause to Juanita Smith? Juanita, big thank you.
Thank you.
If you haven't bought the book yet, now's the chance to buy that book. Click that link that Legendary Rupali is sharing and buy it. You get 50% off and sign. Sorry, back to you, Rasti. I just had to interrupt with that.
No, you're all good. No, thank you so much for all the supporters.
Yeah. Now, just one thing I want to bring up, Rusty, actually, and that's one thing, like, love your depth of thinking. I just noticed behind you on your banner, and we've had this chat off camera. I hit financial independence a year or two ago, and isn't it such a great feeling? Because on your banner, it says behind you, achieve financial freedom by property investing. Isn't it such a great feeling to be financially independent, Rusty? What was it like when you hit that moment?
No, it was amazing. It was amazing. So I'm a big fan of planning and visualizing, and then having that passion that will be fueled just because of the visualization. So exactly like, in 2010, I'm not kidding here. I came out from my MBA program, have no job, still some debts to pay on my credit card. And I visualized literally that in 10 years' time, I would like to financially retire, don't really have to worry about the job, and really want to be running after my kids on the beach. I'm not kidding. 2 years ago, I was in Northern Beaches next to the beach without really worrying about my job because I quit my job, the job that I had. So there's a lot of power in visualization, law of attraction, as we call it, the secret. More we think about it, more belief we have on it, the universe will align by itself to serve you that. So I'm a firm believer of that. So that has actually worked for me on not just one occasion, on multiple occasions. So the question on like, how did I feel about this? Like when I achieved that, honestly, I felt that in 2010 when I didn't even have a job. So because I was feeling it, I was living that dream already early on. And
so just to interrupt here, that dream he's sharing, you won't believe, he has a very close friend in UAE, and he's sort of a mentor brother for him. He has shared that particular dream in an email with him in 2009, I think, when he wasn't having a job. And he said, I'll be financially free when I'll be 45. And I will be living on the beach. I'll have 2 kids with whom I'll be going on a sunrise walk. So, and we read that email after 10 years, and he wasn't even sure that he wrote at that time. And he's like, yeah, I've done that.
Oh, that's incredible. Let's give it up for Rasti and Rupali. And there you go. In fact, I actually want to talk to you for a moment, Rupali. So Rasti, enough Rasti from now. I want to talk to Rasti's legendary boss and wife. So let's give a round of applause to Rasti. I want to bounce over to Rupali for the moment. So Rupali, now again, obviously your bias being Rasti's legendary wife and boss. Rupali, what was it like when you guys first moved to the beach? What was that financial independence feeling like, Rupali, from your point of view?
Yeah, it's basically a dream come true for us. He aimed for it, and we all together, we got it. And every day is a blessing. We moved to the Northern Beaches a week before COVID started. And
wow.
Yeah. And since then,
like February, March-ish last year, was it?
Yes, yeah. 6th March, we moved here in Northern Beaches, and I think 14th onwards, the lockdown started. And since then, COVID has been a sort of a blessing for us. He gave his best during the business and achieved a lot in this last 1.5 years. And he's a BX Excellence Awards finalist for last year. And today morning, we got that he is a finalist for 2021 as well. So yeah, hope to get more.
Oh my God. Can we give it up for Rupali, and bouncing back to Rasti for the moment. Rasti, I want to ask you now again, you're the research is your thing, and the property markets. Now, obviously, for those in Sydney, we all get out of a lot of us get out of lockdown jail next week, which I'm really excited about. Now, what I was going to say, Rasti, is what's happening with the property markets? Like, what's happening now, and where do you see things going as, had 2 years of lockdown. Australia's breaking up with China, and now we're besties with India, which I was reading about the other day. I've always wanted that. So we've broken up with China, and now we're besties with India, which I think is awesome. Where's the property market going, Rasti? What's your outlook? What are your trends? I'd love to know what your thoughts are.
Sure, happy to share. And it's a multi-million-dollar question, by the way, Edward. Now, when we talk about property market, first of all, there's not one market in Australia. There are multiple markets, so markets within the markets. Also, whenever we're talking about the market outlook of the properties, we should also be clear that what sort of time horizon we are talking about, because lots of people get wrong over there. So property investing should be done for the long term. I mean, as if we should be buying with the intent that as if we are not really selling ever, and it's an intergenerational assets that we are buying today. So with that perspective, if you look at the history of property market performance, it has been amazing. Like I was looking at the chart, if stock market has given 11.3 over the last 100 years as an average per year, Australian residential market has given 10.7% per year. So now, by the way, 10.7 is a total return. So that includes the rental yield, as in the rent that you collect from your residential market, is added over to the capital growth that we get.
Without, of course, that crazy volatility of the stock market. I mean, property tends to do that, doesn't it? Where stock market is whatever stage of the roller coaster you get on, isn't it?
Exactly right. So because the good thing with stock market that it's volatile, like it's liquid. I can choose to buy today and I can sell it tomorrow. So that's how the liquidity is there.
Sorry to interrupt, Rasti. I just want to give a shout out. The legendary Gotham Collar just bought the book. Can we live around applause to Gotham? Thank you for buying the book. If you haven't bought the book, now's the time to do it. Click the link, click that legendary Rapali sharing. 50% off plus signed by Rasti. Sorry, Rasti, back to you. Continue.
All good. No, thank you. So you're right. So it's the liquidity which goes against the idea of buying properties is actually in a other way is helping us to ride the emotional journey, because then it becomes less volatile. So if you look at the chart, as you said, if stock market is going like this, property market goes a little, I mean, it's still cyclical. It goes up and down as well, but not that much as stock market. The other benefit of properties is the leverage. Now, we need $100 to buy stocks worth $100, but with the help of banks and with the likes of Kyle's and Madhu's, like we can go approach the bank, and Gotham actually as well, go to the bank, borrow money, $90, and can choose to use our $10 to get exposure of $100. So now when we talked about 11.3 versus 10.7, the difference is not huge, but when we talk about the leverage, so when the market gives me 10% and I'm actually having a leverage of 10 times, effectively it's a return of like 10 into 10, as in 100 times, basically. So I can get my $10 back within a year with that average return. Now,
and I like what you said earlier is that, I'm sure if you like jump on CommSec and buy a share, you're writing the daily highs and lows, and let's say Commonwealth Bank is a bad day and you want to sell your stocks. You can't do that with property. Once you've got it, you kind of got it. You just can't hit the sell button, can't you?
No, exactly right. And the other thing which actually goes in favor of properties, it's very tangible. It's so tangible that you can touch and feel.
Carrie Ann Nielsen just bought the book. Can we give a round of applause to Carrie Ann Nielsen? Carrie Ann, we love your work. Carrie Ann, bless your amazing heart. Sorry, Rasti. And by the way, if you haven't bought the book, now's the time to buy it. Sorry, back to you, Rasti.
No, good. Thank you. So the sentiment actually makes it harder for anyone to remain invested. Now, this is a very tangible asset, like you can touch and feel, you can live. And that's other aspect, that it's not that risky than any other risky assets, because in Australia, 70% of housing is used as a house, as in for people to live in. Now, when I'm when I have a home to live in and I have my investments, and if something goes wrong with my job or my economic down, like I'm actually in trouble, I'm not going to sell my home. I'll be selling my investments. So home will become the last asset that somebody will be selling. Of course, the transaction cost was high. A little movement here and there will not make my decision very quickly in one way or the other format. So because of those reasons, the leverage, the lack of volatility or less volatility, I should say, And moreover, the great thing with property investing is that you don't have to sell the property to take the benefit of your profits. Again, you can go to the Gauthams and Kyles and Madhus and get the equity out of your property. $0 capital gain tax because there's no capital gain there. But then we can extract that equity out and then invest again. Now, so those are the benefits. Now, what's happening, Edward, with this current market? I don't want to give a pass to your basic question, what's really going on in the market today or these days. Now, government has a role to play. Now, on one side, they're saying the interest rates will be low for quite a long time. The reports that I'm reading, yes, there might be a bit of tickle up, and it should happen with the interest rate, 1 or 2 rate rise. That should happen because what it does, it gives a bit of ammunition to the government again, back to them, that if something goes wrong, then they can pull the lever again. Now, where we are seeing the interest rates, they're so super low. Now, when we see the market, like market has given on average in Australia 24% in this year, like last 12 months ending September. 24% is huge when you have to put only your 10% to get into the market. So you have actually tripled your money effectively in just last 12 months.
And this has been during the year of like COVID. This has been like the worst year ever, and it's still doing that.
And that actually highlights the point. Like when we were reading the media reports, March, April last year, there were commentators talking about, drop of about 20, 30%. And that was actually rising that kind of panic among the people or investors that what they should be doing. And that's what, that was a good report, by the way. I'm not really blaming the economists then because they saw what was really happening. But what happens is that when the government bodies also read those reports, they realize that, oh, geez, we can't really let this happen. So they jump in and they play the...
Rasti, that drop-off that you're talking about as well was also what you've covered in your book. It's a knee-jerk reaction. It's people making the wrong decision at the wrong time. So the market doesn't drop because it drops. It drops because people are selling.
Exactly right.
Okay? So this is actually raised in your book as well. We're actually working with somebody like Rasti or with somebody like a financial planner will actually mentor you during that period where the knee-jerk reaction is panic, sell, get out because the world's going to hell. It was actually a great opportunity when the market dropped to actually put money into the market. And the people that have actually made fairly good money are the people that actually bought in. Now, why do you think the property is being driven? Is because there's nowhere else to put the money. You can either leave it in the bank to earn nothing, you can put it in the equities, which are overpriced, or you can put it in the property, which is driving the price of property up.
No, exactly right, Jim, exactly right. So there's so many, look, the market is moving. Market should be moving. But as I was saying before, we are talking about long-term investing here. I've seen people making a 30 years investment decision based on what they have been hearing for the last 30 days or maybe 3 days.
Yeah.
Right? So you can't really...
Barbecue expert.
Barbecue experts, right? So avoid them.
Right, them. Barbecue expert, Kyle.
They're good for barbecues though, but not for investment decisions making. Yeah. So yeah, so this is what I actually covered as well. Like we have to have a plan, we have to have a strategy, how we can use that kind of leverage that is out there, but then also not over leveraging. And that's the challenge that lots of people have, because especially for Sydney siders, what we have seen is like market is going up and up and up for last so many years. And they were like, okay, this is how money should be made. I don't really know why my elder generation was not really doing anything. Because they have not really seen interest rate at such a high level, like it was 17% at one stage or even higher. They have all forgotten about it. So my point is that, yes, one should be doing something, but not overdoing it as well. So there has to be a level of financial planning, and talking about the what if scenarios and the risk around it as well. And that is what the government is trying to do. Like they want to clamp the lending policies by coming up with sort of different ratios, saying that one should have limited number of, limited borrowing based on their income. Because with all sorts of grants, because last year the government had a job to bring the economy back in the midst of COVID scare. Now we have actually been one of the very finest country to manage it very well. And now the question is that, okay, how can we bring the economy back? Because there are other implications of to the society based on if our economy is not really doing very well. So the focus has been to bring the economy back, so interest rates being low. What it means actually is that people should be investing money. And to Jim's point, what is that money doing in the bank? Not really getting much of interest accumulation over there. So one should go and invest. And property is certainly one of the big good ways, but it's not for everyone either. So one has to be very much aware of those risks, aware of the mistakes that people make. As I was saying before, people should not really be just following their barbecue friends' advice on what they've been doing. All the policies from the government, like off the plan, first term grant, that's for serving them that the economy should come back. Now, is it for you or not? A financial planner can help you with that to understand whether it is for you or not. But there's a huge amount of money to be made. If you look at the top 200 rich list from BRW 200 rich list, 40% people have made money from their property investing. Yeah. So they have property empires, 40% of them, right? Yeah. And as Mike was alluding to, like 72% have only one property there. So if somebody can do such a high level, first of all, not many people invest in properties. And when they do, they get stuck after one property. Yeah. So 72% have only one property. Other 18 have two properties. So within 90%, they can't go beyond one or two properties. And we need a portfolio behind it to be able to serve that. So,
but typically, that will also come down to, again, I love referring back to your book because you've actually covered it so well in that. It's where like from what I've seen, and this is both as an accountant and as a financial planner, is people are either looking for a get rich quick scheme. They're sort of saying, well, I want to buy a property and flick it and make hundreds of thousands of dollars and I'm just going to retire and do this once or twice. Or they try to figure out why things won't work. It's simply a matter of actually taking action. And the taking action is to actually speak to somebody like Rasti to actually get you on the right track, identify what your goals are, and actually get a plan in place to make it work. Is that not right, Rasti?
No, exactly right. Like, I'm not saying just use me. Like, there are so many other professionals as well.
No, in this forum, we're only going to use you.
Yeah. Only Rasti only. There we go.
All I'm saying is that one should just go to an independent, genuine advisor. Like Rasti. There are many out there, and whatever works for you, kind of thing.
But the reality is, though, if you go to a financial planner, okay, financial planners have a tendency to stay away from property. Okay, it's hard to, and why we actually joined our financial planning group is our licensee actually recommended property. They actually were saying, hey, look, you got to have property in the portfolio. You can't only have property, you got to have balanced portfolio, as you know, Rasti. But the thing is, though, you got to, when you look for somebody to assist you with the property strategy, you've also got to be looking at, don't watch where the vested interests are, because if you get a financial planner that's not interested about talking about property, then you're probably talking to the wrong person as well. So you got to have that balance.
So true. Balance in everything that matters. And before I forget, like, I should also add that I'm a firm believer in giving back, and I always encourage people to give back as well. Like, sometimes, like, we just work for ourselves, then we increase our circle of influence. We talk to our family, then we talk about society. So one of the purpose of us running this business is basically not to make money only, but also to be able to become more capable to support unprivileged families. So we are corporate sponsor of a charity by name of So They Can, and they're doing a fantastic job raising education and kids in Africa. So we not only support some charities back home in India, like that's where I'm from, but we wholeheartedly support So They Can in the efforts that they're making. So lots of people think that, look, I'm leading a very good life. Why bother? Like, it's working. And what I really challenge everyone is that, okay, what's your purpose beyond you? So if you're doing all right for yourself, that's great. For your family, awesome. For your circle or for your society, that's great. But there's what else you can do it, because not many people are in that position to be able to do something for someone else. So book is not just about buying properties and becoming rich. I know the purpose of, like, even for those who doesn't really know, even the company name that I come up with, which is Get Rare Properties, it also means get rich and retire early.
Oof.
So getting rich and retiring early doesn't mean that you quit job. It just means that you have a freedom of choice so that you can pursue your passions, your hobbies, spend time, and think about a bigger purpose than yourself.
It's funny you say that, Rusty, because I always had this dream. So I hit financial independence last year, which was really awesome. And one of my goals actually was to get a brand new PC and start playing video games again. I actually started that a few months ago. So hence why I put in gaming photos on LinkedIn. And isn't it amazing? And that's why I made that point before, because I know you guys hit that as well. I love where you're going, because it's not just about buying houses to make money. You're spot on. It's about you having that choice to do whatever you want with your life. And I love that point you always bring it back to, Rusty.
Yeah, no, so exactly. So it comes down to what's your why. Simon Sinek style, like, because when you have a clarity of your vision, you have a goal, believe it or not, we will have a lot of passion, a lot of, that will fuel our journey. So I also say that it's not just about your destination. Your journey should be meaningful and enjoyable as well.
Well said. Now, can we give a round of applause to Rasti? What I want to do is, we've got a bit of time left. I actually want to open it up to the floor for reactions. So best way to do it is, if you'd love to react and contribute to the discussion, keep it short and brief and positive. It is being recorded. All you got to do is unmute. And we're going to enter what I call hot mic mode, which is unmute, everyone go for it. Just be respectful. First one in's best. Remember, it is being recorded, so keep it clean and positive. So we're in hot mic mode. Go for it, friends. Love to hear your reactions to legendary Rusty.
I'm going to start out by saying, having reviewed his book and turned it into an online course, is what I actually love was all the case studies. It's real life case studies that practical, and you just get what he's talking about so well with those case studies. He's got over 24 case studies, and they're really great.
Oh, legendary. And I understand, Karina, you said this before we started the launch, that you are, and I love Teachable. I'm actually a Teachable facilitator. You actually converted Rusty's course to a Teachable program. Is that correct, Karina?
Absolutely, and it's absolutely awesome. We've got lots and lots of videos, workbooks, exercises, templates. I'm sorry, Rusty, but the course is better than the book. I've got to tell you that. So,
by all means, I really want the right message to go to different places. Yes.
Yeah. Oh my God, that's incredible.
Karina, would you mind sharing the link? If it's...
Yep, I'll do that now.
Yeah, I can say that the work Corina has done for the book is just 10 times better. We are loving the course more than the book now.
Don't say that. Don't say that, Carly. Shut up.
Yeah, I mean, she has taken the book to a next level.
No, the book is obviously good to have as a reference point.
Yes.
You can't have one without the other. You got to have the book first.
Thank you for saving the Zoom, Jim. Thank you for saving us, Jim. Continue.
So I just put in a link to the course, 50% off today only as well, but see how you go. It's awesome. It really is good.
Oh, wonderful. Round of applause. Big thank you. We're in hot mic mode. So again, please just contribute to the discussion and be respectful. First one in wins. So we're in hot mic mode, everyone.
I'll have a go because my name is Mike. It seems appropriate. I want to talk about the mission that sort of Rasti's on in educating people, and I think sometimes people get wrapped up in the rich component of things, but not knowing Rasti terribly well, I feel like I know him enough to say that money is more a freedom ticket to him, and property investors get a little bit demonized every time an election comes up, or housing affordability or anything like that. There's lots of negative stories out there, but investors, I think, have a pretty important job to play in the economy. There's a lot of people that will never actually, for whatever reason, own their own home, and it's a social responsibility to make sure that property is looked after really well. And I think your average property investor is really just wanting to set themselves up for financial freedom, whatever that might mean. That could be video games, it could be donating the money to charity. And I think, like, of all the people that I know, I'd rather Rasti be a billionaire than probably 99% of the others, because he's going to do better things with the money, right? So I think property investing is an important thing. This book is helping you to reduce your burden on the government if you're having to retire on a pension. So there's a lot of positives that I'm picking up from the room, and that makes me kind of happy because investors can be seen as the devil. And I think Rasti has really shown in the book why it's important, why taking control of your financial future is not just about getting rich and driving a Ferrari. It's actually providing to your family, and when you can, making the greater community benefit as well. So congrats on that, Rasti. I'm really pleased to be here today.
Thank you so much.
Yeah. Hot mic mode, friends, please contribute to the discussion. First one in wins.
Yeah, I just want to add, basically, I agree with the education part. He believes a lot in education. We have been running the educational workshops every month. So earlier we started with a monthly, and now it's every 3 weeks, there's a workshop he runs for 1.5 hours, totally free. And it's no selling in that. It's basically just education. People have question and answers at the end. It's very interactive sessions, which he just wholeheartedly with every pumped up session. It's really good if anyone wants to join. Yeah.
Beautiful.
I'll jump in quickly. I didn't get to say it before because I love the sound of my voice, but I'm actually going to talk about Rusti's voice at the moment. And I had 2 quotes from his book, which I think are really powerful and that came out to me. The first one really goes through keep the end in mind. And I love it. He says, start with your end goal in mind, because once you have envisioned your goal, you can turn it into tangible dollar value target and begin working on your strategy and finances. And I love that everything that you do, it has to be based on where you want to end up and make strategic steps today to help you achieve it. And I love it. Second quote that I had lined up that I just have to share because it's good. From chapter 7. And he says, the most powerful action you can take before initiating any investment decision is to invest in yourself first. And I think that is such a great part about this book. It's about investing in yourself, investing in your education, investing in becoming a better you by bringing that information and taking the information and talking to the right people, including obviously with Rasti and that group. That is so powerful. So good job, Rasti.
Thank you.
Here. Hot mic mode, friends. Feel free to add to the discussion.
I think Vish is on. I think Vish is on the hot mic now.
Hey, Vish. Hello, Vish.
Hey, I attended one of those sessions from Rasti. It was a couple of months ago, and I immediately know that he's the guy I really wanted to work with. He helped me with my first property, investment property, and we settled last month. It's going good. Like I'm so happy that I happen to know him, and I started reading this book. I got it a couple of days ago, and I'm thoroughly enjoying it.
Thank you, Vish. It's such a pleasure working with you.
Thanks.
Wonderful. Please, friends.
Yeah, one of the things you've also mentioned, you mentioned it in your book, but you also have talked about it. Where property actually helps you get ahead is the fact of the leverage. Okay? Anything that you do that you can leverage is going to get you further ahead. And that even applies in business. So in business, if you're in business and you're doing everything yourself, then you can only potentially earn what you can earn in how many hours you've got in a day. And I believe that I'd talked with you as well, Ed, probably 10 years ago about this exact same thing.
And that's why I'm on Teachable. I do webinars and Zooms.
Yeah.
I am leveraged to the hilt thanks to your education, Jim Vass.
So leverage goes beyond a business, okay? If you're looking at it in base terms, as a business owner, you could either do everything yourself or you can employ people to do things for you, which will basically mean that you've got a greater output. When you translate that to property, you can actually say, all right, well, look, you can use that 10% of your own money and leverage 90% of the bank's money. And whilst that's really important to be able to do, I always, as a financial planner and also as an accountant, and you'd be looking at sort of diversity, you can diversify in a property portfolio You can say, look, I'm going to have in different locations in Queensland, in rural New South Wales, in Victoria, whatever it is, for a bunch of reasons. But the diversity also needs to be by having an equity portfolio as well. But the difference being, though, for your equity portfolio, if you're going to leverage it, it's going to be on margin lending, which is the interest rates are very high. You have to be ready that if the market drops, the lender's going to be making a call to say repay back X amount of capital. So it's one of those things that you can appreciate the fact of why leveraged property is so good, because it's pretty much a set and forget. You get it there. Once you've made the right decision at the start and you've got your gearing and your strategy set up, and you want to then introduce some diversity, the diversity comes into using some of that equity that you may create in your property to actually gear equities as well, in order to try to get you invested across a number of different sectors. But yeah, your underlying ability to actually leverage is property, and there's no two ways about it. That's all there is.
Well said.
This is great. If I can add one more thing, always take property investing as a business. The whole thing as a business. It's not like you just go and buy one property. It's a business. It's not a hobby. And just like in any business, you need to have a business plan, and you need to have the right people as a business stakeholders to help you through. So to me, we talked about financial leverage, but there's a far bigger leverage which is in action, which is knowledge leverage. Because knowledge leverage will tell us where to put our financial leverage, because financial leverage is a double-edged sword. When we borrow money and when the property goes up or any investment goes up, the return is multiplied positively. But when it goes down, it can go and hurt you big time. So knowledge leverage is far bigger. And then when it is in conjunction with the financial leverage, it's huge. So I thought I just saying it out.
Awesome. Loving it. Now, we're coming towards the end. If you want to say something, now is the time to say it. Unmute, add to the discussion. Now's your time to say it. Going once, going twice. Sold to the handsome Indian man by the name of Rasti. Rasti, just want to say a big thank you. Firstly, I just want to say in all seriousness, if you're watching the recording of this, just want to say a big thank you for watching the recording. Best way to reach out to, Karina, Jim, Kyle, Mike, and of course, Rasti is add them on LinkedIn, start the conversation. If you are here live, just want to say a big thank you. I'll be getting the recording up right away. And what I want to do is just to close the event, I actually want to do closing thoughts. So we're going to do closing thoughts of our three speakers, plus Karina, Rapali, and then to Rasti. So and what a closing thought is a quick bit of advice from all our elites here just to keep us thinking. So the first one I want to hear closing thoughts. Kyle, what are your closing thoughts, my friend?
Closing thoughts. You've all of us going out to our Friday. We're going to go hopefully pour ourselves a drink this afternoon and have a relaxing weekend, clean the house the last weekend before the lock up ends in Sydney. Take the time to think about what you want to achieve. You might decide to invest in shares. You might decide to sell everything and put it in cash in the bank. You might decide to put it in crypto. You might decide to go talk to Rusty and put it into building a property portfolio. But whatever you do, do it with purpose, do it with intent, and do it with a strategy for the long term. Just think about it and then take steps to achieve it.
Yeah. Kyle, you're a smart guy. Round of applause to Kyle. Mike Mortlock, I want to hear your closing thought, my friend.
Thank you. I really want to say in closing that it's a privilege to be here, and I wish all the success to the book. It's the sort of book that I really hope is on the shelves of any aspiring property investor. And my closing thought, I think, is to really value expertise. I mean, we sort of get into this mindset that, that's a little bit expensive, or if I have to pay for a buyer's agent, then I don't get to afford as much of a deposit on the house. But really, the cost of getting it wrong is enormous. And I think as important and maybe even more important than the cost of inaction, right? And the reason why people aren't achieving their goals, the 72% of people that only own one property, is because they're getting that first one wrong. So whether you're talking about a buyer's agent or a mortgage broker or an accountant or solicitor, conveyancer, whoever, I think you really need to value the expertise. And Rasti's got a lot of very valuable grey matter between his ears, so leverage that.
Oh, well said, Mike. Love your work. Big thank you. Jim Vass and then Karina. Jim Vass, can I get your closing thought? You handsome Greek god and man of wisdom, you, Jim.
Mate, you say all the right things, don't you? Look, I think it's a combination between what Kyle said and what Mike said. It's simply a matter of take action. Don't think that cheapest advice is the best advice. And sometimes we'll see it as well, where people either want to skimp on their accountancy fees or their advisory fees, or they want to skimp on financial planning fees. Yeah. It's simply a matter of sort of saying, well, if you're not prepared to spend a bit of money for your own future and for your family's future, people are not going to give it to you. Okay, you need to work with people that know what they're doing, and that costs money. A successful person puts value on their time, and that value is not necessarily the race to the bottom of the market for being the cheapest. It's simply a matter of you find somebody that's good, you've got to make sure that you trust them, that there's a connection there, that you can work with them, because it's a long-term relationship. It's not a one-off transaction deal with Rasti and that's it. It's something that there's a relationship that's been built and you're investing in that relationship and the returns will come.
Oh, well said, Jim. Love your work. Karina, love to get your closing thoughts.
Always springs to mind is you don't know what you don't know until somebody like Rasti tells you what you don't know, and it all comes down to education. Bottom line, don't care. If you're not investing an hour a day on yourself, then you're going backwards.
Here. And just on that note, I couldn't agree with you more. Again, I was a homeless veteran just over a decade ago, and here I am today doing exactly what you said, Karina. I love that thinking.
Mm-hmm.
There you go. Round of applause to you, Karina. Legendary Rupali, Rasti's boss. What are your closing thoughts, Rupali?
Yeah, my closing thoughts are property investing, treat it as a business and work with a professional, independent team and just who works for you to achieve your goals. So that would be my take.
Oh, wonderful. Rupali, love it. And of course, to the man of the moment, you get the closing thoughts, and we'll finish this wonderful launch on that. Rasti, what are your final thoughts for all of us?
Before you give him the closing thought, can I just go back to the very first conversation I had with Rasti? And it was, Rasti, when you refer somebody to me, I'm not going to advise them necessarily for what suits you. So if they don't suit, or if their position is not to buy property, you've got to be aware I'm not going to advise them to go with you because you referred them to me. And Rasti's response was, that's what I expect. It's got to be what's good for the client.
That's integrity, isn't it, Jim? That is ultra integrity, Jim Vass. Love it. Rasti, the final word is yours. Rasti, what have you got for us, my friend?
No, first of all, I really want to thank you all and for all the listeners for the recording later on. So really, I'm just humbled to produce a book and then get this kind of attention today. So really, very much appreciated. My closing remark would be that there's a huge world out there. It's an oyster. So whatever you like to choose, you can visualize it. It's yours. There's nothing between you and your dream other than yourself who's stopping it. So have faith in yourself, have belief in yourself, and then universe will align, get you all the tools. The best thing that you can do is go and reach out to the people who have done it successfully and who can guide you with a lot of integrity within themselves. So whatever you can choose to do, you can do it. That would be my remark.
Oh my God. Friends, thank you so much. Can we all please unmute right now and give her a thunderous round of applause to close this book on? Thank you, everyone.
Congrats, Rasti.